Okay, so I bought the dip in the update on my wallet update the other day. Let's just recap from a couple of weeks ago. We were about $80, $50 to $70, sorry, up. And then it came, yeah, 80 something dollars up. And then it came crashing down on its dip, as it does, because like XRP was sitting fairly high in its value that it had been over the last 7 months. It sort of come back up to its high standard. So the Bitcoin broke new records. So we're just sort of, that's been up and down a little bit, and this is the first good dip after its rise. We've had one good dip, and then we've got another little good dip. But the last dip was only small. This one was a bit bigger dip. So, for instance, to explain, so we were $80 up, and then I went to $160 down, $160 something negative, which was the big dip. So I put $200 more in there, and I bought another 100 of WEN and Terra Luna Classic, LUNC. So now when people say buying the dip, just because originally I bought in a dip, and then then it's gone down from there. So just because you buy in a dip doesn't mean you're going to do well. It may start going back up and you're like, yep, nailed it, and then it may go further back down again and have another second run. So this is why it gets a little complicated and why people get scared. But buying the dip isn't buying the dip once. Buying the dip is trying to follow the dips. Okay, so especially if you're on a coin with a really high market cap that's strong, and it's going to be hanging around for a while. With ones like that, then that's what you do. Don't put all your eggs in one basket. Look, if you're just using it like a savings account, in the sense that if you got a little bit of money, you can buy into it, and then with your pay or through however you manage, if you can throw $50, $100 in, or $200 in over the course of a couple of weeks or over the month, $200 a month even, or $100 a month, whatever, $50 a month, like, it doesn't matter. If this is probably the best way to be able to make money from crypto, is continuously by putting little bits of money in. But do your research, have a look, pick a coin you like, and stay with it. The more you start switching, swapping, and start second guessing yourself, the worse it's going to get, the more you're going to lose. And it's just going to cost you money to swap it around and buy and sell, or swap it around a bit. So try to choose something you can stay on. And now if it starts losing and it dips and you're, $20, $6, $100, $1,000 down, then buy some more. And then if it goes down again, then buy some more. Every time you buy, it reduces your average buy rate. Okay, it's going to come back up. There's still a whole bull run ahead of us yet, so it's going to come back up. Like, especially with the main ones, they're still yet to have another run yet. They've only come back to the highest standard it was after the last bull run last year. We haven't even seen this one. So we're starting back at the average high that they all came to, and it's all sitting around there, dropping a little bit. So follow your gains. That's the other point we like to try to do. So look, the other day when we were ahead by $80 odd, Ethereum was over $6,000, Bitcoin was $183,000, and Ripple was over $5. So now everything sees quite low compared to what it was the other week when we were high. So obviously everything's going to drop, even if it's all in positive here, because it's coming back from the dip. So we've made like $40 overnight, because I was $167 down yesterday, and now we're only $122. So the dip's happened and it's coming back. Doesn't mean it's going to dip again. Doesn't mean it's not going to dip harder. It could do anything. So that's why we use our graphs to try. But like I said, it's still a guessing game. Otherwise, everyone would be making money. So yeah, look, graph looks healthy, only because like even over this last day, there's a big dip there. It's been fairly consistent. That's consistently high buying all day, which may then go, well, it's going to dip, or that could be a positive and go, well, people are buying and selling, but the money's staying in there, so maybe it might stay healthy, and then this could be a sign it's about to fucking skyrocket. Sorry, it's about to skyrocket. So that, not quite sure, but anyway, that's when you start looking at your news and all the other bits and bobs. And be careful with that. Be careful with reels, especially reels. You've got so much mixed information. You got to keep your emotion out of it. Don't put your money on something, see a reel and go, oh geez, I should pull out. Don't do that, please. Because there's just so much crap on the internet. If you really want to find out, if you see a reel and it goes, oh, this is how, oh geez, Google it, search it, use a different use a different search engine if you want, like DuckDuck or someone else. Just do some more research into what you think is what's affected you and made you think this could be happening. Look into it, because it could be all just complete false. I've done that a bunch of times now. You can't find another heading like it anywhere, or anyone talking about it or nothing. It's just like, well, you know, it's just scaremongering, and it's all out there. So anyway, cheers heaps. It was just touching base on that. So yeah, so now that it's dipped again, I'm going to try probably put another $200 in soon. Whether it's over the next week or so, I don't know. I'm not going to rush. So I put a $200 in the other day and bought on the start of the dip when we were like $180 down. And now it's started to bounce back, which is good because I reduced my average. I'll do another video too to show how much the average reduces with putting just a little bit of money on. So like say for when, I've now got like 300 and something bucks on there or something. And when I put money on it, it reduces the average, especially if it's already a lot lower than what you bought it at. So yeah, I got 274 bucks in when, and we're down $25. So that means if I put money on it, it's going to reduce my average a little bit. And it may be bugger all, like 0.0004 cents. But I'll tell you what, if you keep doing that, it's going to make a huge difference, because not only are you rising how many coins, exceeding how many coins you have. Not exceeding, that's not the right word. So not only are you just accumulating coins, but then also you're reducing the price. So then when it does go up, you got more coins making you more money, so ×3 or whatever. And then also because you reduced your average, you're going to the average you reduced from originally buying, like that is a percentage of profit as well that you're going to start accumulating. So it does come back very quickly once it starts building up. You know, that's the surprising part. You'll see, go, oh geez, I'm a few $100 down, and then the following week you're like $300 up, and you're like, Jesus, that was quick. And that's just because you've accumulated more coins and while reducing your average, and it comes back pretty quick when it does. So that's the best way to do it. It's honestly the best way to make money. Put money in you don't need to take out, that you can leave in there. You don't lose unless you sell. All right, so you don't lose unless you sell. And look, I'm not saying you shouldn't sell, especially if you've got a lot of money in there. You still got to have your limits, okay? You still got to call your losses, but you shouldn't really have to do that so much with, unless you picked a coin that wouldn't be right to do that with, okay? Like one that isn't very popular with a low market cap, okay? So I wouldn't do that with any of those. The bigger ones, they're always going to respond. So whether you just got to wait it out, then it will come back. It should come back. You just got to keep buying the dip when you can and putting more money on it when it's under. If it's not under, then it's up to you whether you put it into another coin or not. If you got the money, I would just save it. I'd pick 1 or 2 coins, maybe 3, depending on how much money you already got in there. Spread it out over a few different ones from different blockchains even. Diversity, a lot of professionals, but a lot of rich people, especially more so in the share market and the stocks, they talk about diversity. Your best hope is to diverse your money across different areas of stocks, as in like whether it's like farming or technology or medicine. Still sort of, yeah. Anyway, you get the gist. Yeah, so diversity, so that helps, but not if you have a little bit of money. So I start with just 1, then I branch to 2, and then I branch to 3 as I put more money in. But only once the first one's built up. I keep buying the dip, and then I've got a few $100s in there that can make me some money, and I'll buy into something else. Because normally that will go green, and I'm not going to buy it when it's green, so then I buy something else. But because you don't want too less of money in heaps of them, because you're not going to make money that way either. you're not going to jag a $10 or a $20 thingo that makes you thousands of dollars. You're not going to do it. So yeah, so you know, you want a few $100s on each minimum, and just keep buying the dip until it goes green, and then buy another one, or save the money until it dips again. And when it, just concentrate on one if you want. A lot of people do really well that way. They just concentrate on one and keep buying the dip. They might be doing that over the next couple of years, but in the end they end up with just amazing profits just by concentrating on one they know that's always going to do well from their studies through what it does, what it's going to do long term, where it fits into the system, what people use it for, and then the news around it, and yeah, all the news around it, and where they think it's going to go. So yeah, all these things matter, but that's how you buy the dip, and that's the best way to get gains in the long run. So, which I've proven before. We did that a little bit ago. When I made $300, I went and sold it, and that was off $400, $300, $400. No, it must have been $500 or $600. Sorry, because I was up 71%. So I was up 71%. So it was more than half, and that was 300. So yeah, it was only like $500. And then yeah, I made $300 out of it for a week going up, pulled out, wait for when to drop again, and then bought back in. So this is how we do it. So thanks for listening, everyone. Good luck. Take your time, don't rush it. You're not going to miss out. Don't use the emotion of missing out and buying and thinking you're going to miss out and buy and think you're going to lose and sell. Okay, take emotion out of it. It's a waiting game. It's a long-term game, even if it is just weeks. Downturn can last for months. So yeah, be patient. Thank you very much. It's just advice. This is just for fun, just advice. Hopefully you can help someone out. Thank you. Right, bye.